Hey, what's going on YouTube? Nick here. Thanks for tuning in again. So today we're going to take a look at the trading tactic and one of my favorites called an ascending wedge. All right, so let's jump right into it. I got some text on my screen there. Let me get rid of that real quick. Cool. So let's take a look at the ascending wedge. So essentially what ascending wedge is there's three types of wedges, and I'll go over the other two in different videos, but there's the symmetric wedge, ascending, and descending wedge, okay? The ascending wedge is going to signify a bullish move coming, okay? It's going to signify possibly a bullish move coming from a stock that's relatively stagnant and or from a part of the day, that stock is stagnant, be it in consolidation or just low volume like this one, for example, okay? So let's take a look at this stock right here, ARLZ. All right, so this is a pharmaceutical company. I really didn't look too much into this stock. I didn't even trade the stock, but I did see it, and I like how it shows a really good, concise ascending wedge, so I wanted to use it for example purposes. So if you look at an ascending wedge, you'll notice something. You'll see a stock right here. This is the day's open right here, consolidating. All right, so it opened up, went down, went up, went down, went up, and it's kind of consolidating to real slow, okay? When I start seeing consolidation like that, there's a couple things that I look for. Number one, I look down here at volume. All right. Now, beginning of the day, the volume's up a little bit. No shock there, right? But as it goes on, there is absolutely no volume, very little volume, I should say, going on. Okay. So that's something that I do take a glance at. And you can see by the several ticks here that really during that time frame, it didn't move at all. Okay. So that's something that, I'll look at just to kind of see what's going on with the stock. And then another thing I look at is I look at basic technical analysis, okay? Higher highs, higher lows, all right? We all want to buy low. We all want to sell high unless we're shorting stocks, okay? It's easier to buy, in my opinion, versus locating shares and finding the shares to short and paying short interest and all this jazz like that. I will short, and there will be videos on it, but it's easy right now, especially in this bull market, just to go long, okay? So let's keep things easy on ourselves. All right, so the ascending wedge. We're going to look at, like I said, is consolidation. So it opens up, right? Goes down, goes up, goes down, and now it's just kind of trading sideways, okay? Well, I'm looking for higher highs and higher lows, okay? Primarily, what I look for, the first thing, is I look for the lows, okay? And I look and see, okay, is this low and that low and that low? Is that making kind of a higher high and higher low? And you can see right here that the low right here is lower than this low, which is lower than this low, and so on and so on and so on. Okay, so if I line my crosshair across that, you can see that my crosshair is at the very bottom of this low right here, which is still higher than this low right here, which is still higher than this low down here. All right, so that right there is going to tip me off first thing. Okay, so this thing is uptrending. All right, I like drawing a line. If I can see a line that where I draw my chart line, where it starts off and it starts going up like this, then that tells me, okay, we're making higher lows. That's a good thing if we want to go long, okay? And then the big thing also is, all right, so I'm going to look at the top of the trend now. This top of the trend has decent resistance. In this case, it's $1.72. It has decent resistance. It's not breaking out of the top of this trend, all right? So this is giving me a flat line look at the resistance level. So if you look at it, between putting those two facts together of the higher lows, and you look at this right here of just flatlining, meaning resistance at $1.72, you plot it out, and guess what? You got an ascending wedge, okay? The wedge is going up. You can see it with the white line right here. So that tells me that this stock the price is compressing. It's like squeezing, squeezing, squeezing down, and it just needs to have that pressure relief, and it needs to shoot a direction. Be it up, be it down, whatever. It needs to shoot a direction, okay? And that's where this comes into play, is the volume. So when you spot an ascending wedge where you have a stock that has good resistance up top and is making higher lows on the bottom, that is gradually going up in price from the lows, all you simply do, you plot the wedge out. And you could draw it out, and usually even ahead of time, you could draw it out as it gets smaller and smaller and smaller and really almost predict when the stock's going to break out when the wedge comes and meets. If it's going to break out, okay? So now what we're doing is we're waiting for volume. And bam, right here. This is what happened right here. There's no news right here or anything like that. My scanner would have picked up on everything, and I looked and everything. There's no news right here. It simply broke out of the wedge. That's all it's doing, all right? So right here, higher lows, good resistance, creating that wedge. The price action got squeezed, right? and all of a sudden massive volume shoots, and your indicator to get in is right as it breaks that wedge. Okay, it breaks the wedge and you're in. You could try to anticipate it right in here if you want to, but in the wedges like this, especially in low volume wedges like this, I want to make the stock prove itself to me. Okay, I want to know for sure it's breaking out. I'd rather sacrifice a couple cents a share to know it's breaking out. So say if I try to get in here at $1.72 and I wait till $1.73 or 4, 2 cents a share to get in, I want to see that it's going to prove itself to me to break out. Okay, and look, sure enough, this thing broke out, and look what it did right at about 120. Look what it did for the rest of the day. It just shot up. So it went all the way up to $1 or $2, excuse me. So you could have gotten, $1.73 to a $2 move right there. So I mean, that's a decent move you could have gotten out of this thing. All right, so this is just a basic ascending wedge. One of my favorite plays. Real predictable, real easy to use, and simply you just got to look for the higher lows, look for a good top on it, and draw your trend lines and just be patient. Wait for the volume, wait for it to break out of that consolidation, out of that wedge, and then ride the wave up. And then obviously, as I always advocate, take profits into strength, so take profits along the way. So I probably would have maybe taken some profits, cut half a position up here, and then it consolidated again and broke higher, and I would have seen what it would have done. Okay, so as always, guys, thanks for tuning in. If you have any questions, leave a comment, and we'll talk to you soon. Bye.